Hello everybody, my name is Matt Pacheco. I am a tax partner at Burton Company CPAs here in Albuquerque, New Mexico. What I'd like to talk about today is the gross receipts tax system in New Mexico. If you are new to business or new to doing business in New Mexico, you might have several questions regarding gross receipts tax. It is a tax on persons engaged in businesses in New Mexico for the privilege of doing business in New Mexico. What does that mean? It means that unlike different states, this is a tax that is the responsibility of the business owner. Now, no money should actually ever come out of the business owner's pocket. What happens is the customer will pay the business collects the money, and then remits it to the state. This is done by filing Form CRS Report, Combined Reporting System. You can do this online. There's a TAP, Taxpayer Access Point, on the New Mexico Taxation and Revenue Department's website. It's relatively straightforward. You can file the return as well as pay the taxes on that website. Some people will do it semi-annually, some people will have to file quarterly, and some will file monthly. It really depends on the volume of gross receipts that you have. The more gross receipts you have, the more tax you have, the sooner the state wants it and the more frequent you'll need to remit it. One thing that's different than in a lot of states is that services are subject to this tax. Basically, we operate under the rule that everything is subject to this tax, unless there is a certain exemption or a certain deduction under statute that will ensure that it's not taxable. Exemptions, well, if you have an exemption, you don't even need to file a report. If you have a deduction, you will need to file the report, deduct it, and still pay no tax. No tax will be due. However, the filing requirement still exists. A non-taxable transaction certificate. What this does is it ensures that a transaction will not be taxed twice. So let's say, for example, a customer goes to a spa and gets a massage. The customer will pay the spa. The customer pays the gross receipts tax to the spa at checkout. The spa then issues a 1099 to the massage therapist. Technically, that massage therapist at that point is subject to collecting gross receipts tax from the spa. However, if the massage therapist gets an NTTC on file, they no longer have to collect tax on the spa. And since it's really one transaction with three different parties, the customer, the spa, and the therapist, then the gross receipts tax is only collected once at the customer level. Customer pays the spa does not pay gross receipts tax to the massage therapist, and the massage therapist is not responsible for collecting that gross receipts tax. There are several different types of non-taxable transaction certificates. There's also another common one that we see a lot is with the supplier as well as the manufacturer. It'll work similar to the spa and the massage therapist in that recent example. On the New Mexico Taxation and Revenue Department website, they have a FYI 105 publication. That's FYI 105 publication, and that outlines a lot of the exemptions, a lot of the deductions that you can go in and take a look at that and see if you fall into one of those categories. If you wish to discuss your situation in a little bit more depth and need further assistance, our firm offers assistance with filing, with tax and revenue audits, and other consulting matters. We can be reached at area code 505-265-6604. You can also visit our website at burtcpa.com. That is burtcpa.com. Again, my name is Matt Pacheco, and I'm with Burton Company CPAs. If you need further assistance, we would love to hear from you. Thank you.